And now it's time for Development Debates. We dig deeper into some of the questions shaping the future and present of China. Today, we'll see Chinese experts debating if wholly foreign-owned hospitals can be more competitive than domestic hospitals. China's first wholly foreign-owned hospital, Artemide Hospital, will be built in the Shanghai Free Trade Zone. The investors will sign a framework agreement next week. The hospital is expected to be the first physical wholly foreign-owned medical institution, or wofe, in the Shanghai Free Trade Zone. The main services it offers are image diagnosis and treatment for sports trauma. It's planned to house dozens of foreign doctors. The construction is expected to start this year. It's expected to be put into use in 2 years. An article posted on Medicine Economic News by He Hao said the wofe hospitals are more competitive than the domestic ones. He said the wofe ones can outcompete for high-end patients with the public hospitals. Although Chinese private hospitals are targeting high-end clients with special medical care, they lack the talent, technique, and brand to get them. The private hospitals cannot compete with the public hospitals, so the government cannot prevent the public hospitals from providing special medical care even if the service doesn't serve the general public. The wofe hospitals are actually able to compete with the public hospitals when providing special medical care. He said there's a great gap between Chinese medical care and the advanced medical treatment abroad. He said that the different systems and ideas have led to a huge gap. For example, in Chinese hospitals, the highest-ranking doctors will determine how to go about treating difficult illnesses. So in these Chinese hospitals, it's more that doctors are serving the authority figure. But in advanced hospitals, teamwork is advocated. Peer review is valued over positions of authority. This system is said to help foreign hospitals stand out. Because of the system, cultural values, and the brand effect, the wofe hospitals are much better at attracting foreign talents. Because the wofe hospitals are mainly focused on high-end clients, the doctors can get a better salary. The wofe hospitals will also provide more opportunities for doctors to study abroad. This is more attractive to doctors who want to stay ahead of the game, especially since most domestic hospitals don't get these opportunities. In an article posted on China Economy Industrial News, a researcher at ASKCI Consulting, Liu Shan, said there are risks being taken by wofe hospitals as they test the waters in China. In her point of view, the supporting policies for these hospitals are imperfect. The bank credit mechanism is not sound in China. There is no regulation that requires the government to oversee investment in wofes. This may hinder their financing channels and increase their risk of financing. She also said that there are no special provisions for the taxes of medical institutions. They can only be registered at profit-making hospitals. They cannot be involved in the social medical insurance system. They cannot enjoy tax breaks and subsidies. After the exemption period, the tax department will levy taxes just like they would with a service enterprise. It could have a negative effect on the wofes. The wofe hospitals have many advantages over domestic hospitals. They're more competitive, especially with patients that recognize the gap between Chinese and international standards for medicine. But they can only target a small group, and they'll have well-connected hospitals and authorities working against them. But on an optimistic note, it could lead to reforms in Chinese hospitals.